What's going on with Tesla stock today? We got some big news coming next week. So, should you be buying shares here, trimming? Let's take a look. Stock is down about 5%, 4.5% today on news. I've got you covered here. We're also going to talk about some price targets and look at a chart. I'll tell you my thoughts on Tesla stock. Is it a buy, a hold? A trim? What should you do with Tesla? So, headline: Tesla stock slips after EV maker misses estimates on deliveries. Of course, these headlines can always be dramatic and move markets either way. Tesla posted third quarter deliveries and production numbers on Wednesday. The company's stock price was up 32% on the quarter that ended on Monday. So, of course, we're in October here in a new quarter, and Tesla faces increasing competition, most notably in China. We've heard this story over and over again. So, here are the numbers: total deliveries Q3 2024, 462,890. Production, 469,796. So, on that delivery number, again, the number 462,890. Expectations here, this is according to FactSet Street Account, 463,310. That number is not off by very much. Not at all. This is very, very close. Now, a year ago in the same period, Tesla reported 435,059 deliveries. So, considering that the automotive sector is down and we've had all this negative press on Tesla, how it's not doing well, the delivery numbers here actually is quite a bit better than a year ago period, which some people might be surprised by that when you see the stock down 5% in the headline. Last quarter, the company reported 443,956 deliveries and production of 410,831. So again, this is 443, 462. The numbers are still trending upwards, although we slightly missed this estimate. In the US, EV competitors like Rivian, of course, you hear about Ford and General Motors. GM this week reported a roughly 60% increase in EV sales for the third quarter. It's a little bit surprising maybe to some. Still, its electric business is tiny compared to Tesla's, with just 32,100 units sold. And you saw the numbers we just looked at, quite a bit larger. This is only 4.9% of GM's total sales. Ford's going to report results on Wednesday. Tesla hasn't issued specific guidance for 2024 deliveries, but executives have said they expect a lower delivery growth rate this year versus last, despite the company having added a new vehicle. Of course, the Cybertruck. You either love the Cybertruck or you hate it. My kids absolutely love it. You're probably mixed. Some people online absolutely love it. Others hate it. Whether you like it or not, it is selling some. It's not that large compared to, if you look at total production and deliveries, it's a pretty small percentage. So in the third quarter, Tesla ripped 32%, but basically the stock was down. If you look at year to date, it was up about 4%. So if you look at the chart right now, we're basically flat, 0.72% negative year to date. So depending on when you bought the stock, you might be happy, especially if you bought it here under $150 a share. If you're buying it here at 262, you could be red. Over the past 5 years, it's up 1,500%. So of course, what you buy matters, and when you buy is really important. Some things to keep on your radar here. This is going to be important. So, high profile robotaxi event. Now, this is going to be on October 10th, 2024, set to provide crucial details on FSD improvements and robotaxi market availability. You guys know, if you're bullish on Tesla, right, we're going to look at fundamentals later in a chart. The stock isn't necessarily cheap. So there is some speculation baked into that Tesla's going to keep growing. Plus some moonshots here, like robo-taxis. We don't know exactly what that's going to look like, but it could be huge for Tesla's future. Same with, for example, Optimus. When you think of robotics and having humanoid robots in your home, that could be big, but it is speculation because right now we just don't know what that looks like, of course. So you're going to have this robo-taxi event on October 10th, and then earnings are going to come right after that. Now I want to show you this really quick here. So of course, the vehicles we talked about, also energy 6.9, that's a pretty good number. And this breaks down the Model 3 and Y versus other models, so you can see on your screen. Looking at the fundamentals on Seeking Alpha, of course, profitability, take this with a grain of salt. You don't look at anything like, for example, just look at these metrics and buy or sell a stock. You don't look at just a chart. There's going to be a lot of homework involved. We always say 99% is fundamentals. The last 1% is technical analysis. We will look at the chart here in a second. Of course, the profit margin's been a big topic, and it's really been important for Tesla to be a leader. And you have this conversation constantly. Is Tesla a car company? Is it a tech company? Here's the thing. A tech company is generally going to have higher margins. You look at gross profit margin, TTM, 17%. That number has been fluctuating. One of the reasons the stock sold off is those margins started to compress. As the prices started to come down, Musk was lowering prices, and that really was to combat inflation. When you think of Tesla, Tesla is going to be very sensitive to interest rates, and you are seeing interest rates, the Fed's cutting rates. So in theory, that should help Tesla stock over coming years. That's part of the excitement of why the stock has run up, also going into this robotaxi event. Now, the growth at C- here on Seeking Alpha, again, you don't buy or sell just off of these metrics, but it's showing a projected forward revenue of 12.65%. That's not bad growth, but it's not stellar either. Now, of course, when you have a high valuation like Tesla does, it's an F here on Seeking Alpha, but that PE gap forward is 134. Now, you don't use just this one metric to buy, but I will say this is expensive, especially if you're looking at an S&P 500 company. They're going to say, hey, we're going to look at standard metrics, right? We're going to look at things like PE ratios and PEG ratios. These numbers are very high. You can see this PEG 8.97. Generally you want 1, maybe 2. Pretty expensive. Price to sales, another metric you look at. TTM is 8.62, forward is 8.26. No matter how you slice it, this is not a cheap stock. And then the fact that it doesn't have high margins and people are going to call it a car company, you can see why there's a lot of love and hate for Tesla in the market. You're either a bull or you're a bear. And here's the thing. Again, if you're a bull in the stock, you're investing in this company, you're buying shares of stock. And when you buy shares of a stock, you're buying part of a business because you believe in the future of that business, of that company, that they're going to continue to grow, that they're going to continue to sell more and more electric vehicles. But probably more importantly, if you're investing at these prices or higher, you're probably buying off of some speculation. Not that it's necessarily a spec stock, but there's some speculation, there's some optimism, some enthusiasm baked in for future growth, as well as those moonshots that we talked about. Many believe that autonomous vehicles are going to be the next growth story for Tesla. Now, it's not very tangible right now. You can't measure it. You don't know what it looks like. It could be a moonshot 10x type growth thesis, or it could be a zero type deal. And that's where it starts to make Tesla more speculative. Again, it's not a spec stock because it does have a PE ratio. It's an S&P 500, but it is expensive, and it's expensive for a reason. And part of that reason, of course, is that future growth, autonomous vehicles, robo-taxis, Optimus, but also it is a retail cult stock. Now, I'm a retail investor just like you. We're called individual investors. Individual investors, we tend to love certain names like Palantir, like Tesla, SoFi, things like that, right? Now, Tesla is a good company, and people that own Tesla cars, most people are very enthusiastic about owning a Tesla vehicle. You also have Elon Musk, who is a very polarizing personality. A lot of people really like him. A lot of people don't like him. The fact that he's gotten more political, of course, that's going to sway opinions one way or the other. But he is no matter how you slice, he's very polarizing, and it does impact the sentiment for consumers buying the cars, as well as people investing in the company and the stock. Now, we talk about tools in the tool belt, right? So looking at something like a price target from an analyst, not a reason to buy or sell a stock. But the highest price target on the street is $310. The lowest is $24.86, which is going to skew this number big time. Average price target $210. That's 14.95% downside. Now, this is very mixed. A lot of times we look at these, it's all buys and holds. 12 buys, 16 holds, and 7 sells. So it's easy to see the argument that a lot of this momentum, the 30% gain we had in Q3, well, a lot of that's probably trading momentum. And more than likely, traders getting into it, trying to get into it before this robotaxi event. Now, this robotaxi event could make the stock rip much higher, or it could even be a sell the news event. Maybe the news isn't that exciting. It's a letdown to investors and the stock could sell off. We like to invest in secular growth trends, and we look at themes. One of those themes, of course, is electric vehicles, autonomous vehicles, artificial intelligence. And you can make the argument that Tesla really is an AI company, but of course, I can also see the argument on the other side that it's a car company. Drop a comment below. Let's have a conversation. What do you think? Is Tesla a tech company? Is it an AI and robotics company? Or is it just a car manufacturer? And next, we're going to look at a chart. If you're new here and you're not subscribed, smash that subscribe button. Make sure you click that bell for notifications. And if videos like this are helpful, just quick updates on the market, on your favorite stocks, return the favor to me and drop me a like and drop me a comment. Again, let me know, what is Tesla? All right, so looking at a chart, previous chart days, we do chart days every single Wednesday in Patreon Discord, and you can join us. There's a link below. That's going to be in orange. Yellow is going to be the most recent chart day. This isn't necessarily today, but the last time we talked, I've been very vocal all year in Fired Up Wealth. We've been saying 175 or less DCA with a preference of 150 or less. Now, going into the beginning of the year here, we basically had, if you look at this is July, August, stock kind of slowly sold off going into early January 2024. So beginning of the year, this stock was essentially 50 bucks, somewhere in that range, $257. Just to be exact here, it's $248.42. But $250 at the beginning of the year, it sold off. It got to 130.80. So if you're DCAing that 175 or less DCA with a preference below 150, hopefully you have a cost basis of maybe 170 bucks, something like that, and you're happy with Tesla sitting around $248 a day. Now, if you bought it at 271, of course, you're going to be down a little bit. If you bought it last year, July of 2023, it was a $299 stock. Going back to September of 2022, it was $313. Going back to the very peak, November 2021, it was a $415 stock. Of course, it's been a monster rip. If you look at this run, this had a split and everything, but just looking at the prices based off today's stock price, you're talking about a $15 stock in 2019. It rips all the way up to 407. And you've had this lot of ups and downs along the way. It's been a roller coaster for investors over the last several years. But if you invest in it early, of course, you're up 1,500%. What you care about is the stock a buy now or not? Now, it was in this channel for quite some time and it broke above that. And we set up here, don't chase it. In fact, a lot of people were kind of trimming some shares here and it came from that 271 back into this channel at 182. We're back above the channel. It doesn't mean it has to go back in this channel, but this S3, the support 3 Fibonacci, about $190 a share. On the upside, you're looking at about $300 a share. And it's going to have to retest this 299 that we had recently about a year ago last summer, but it's going to need to break through that. So I would expect to have some resistance around this same line, this $299 to $300 range, if it even gets up that high. But your range here really is 190 on the downside currently on the charts and 300 on the upside. My preference though is to buy it to accumulate shares as a long-term investor, 175 or less DCA with that 150 preference. And we're really thinking about a 5-year investment and we're considering it more of a technology company and not just a car company. So I'm not currently buying Tesla at 250 bucks a share, but I am bullish on the stock long-term. And I'm talking about a 5-year holding. This is not a risk-free investment and might not be for everybody. Hope this video was helpful, guys. Make sure you subscribe, like, and comment. Have a great rest of your day. Take care.